What's going on, guys? My name's Emmanuel and welcome to my channel. Today is a special one, guys. I've got 3 companies for you that pay their dividends every single month. And guys, when I mean every single month, I mean every single month. This is why I like to see owning stocks as you would owning property. If you own a property and the tenants pay you the rent, you get that rental income every month. If you own a stock and the company pays dividends, these 3 companies pay you every single month. We're going to be going through their historical data to see whether the dividend yields has been growing over time. We're going to be looking at their balance sheet, their financial statements, what their income is saying. We're going to be looking at the pros and cons, assessing the biggest risk factors, especially during this current global lockdown. So guys, it's going to be a good one. I'm going to jump on the computer. Let's go.
We'll be looking at today, guys, is Realty Income, ticker symbol O, and they are aka the monthly dividend company. I mean, they pride themselves as being the king of monthly dividend payments. So guys, taking a look at their historical data, they've been paying their shareholders consistently every month since 1994. So I was literally 3 years old when they started paying their dividends, and as you can see, they've been raising their dividends from 8 cents since it went public in 1994, and now they're currently sitting at 23 cents a share that they pay their shareholders every single month. At the moment, their dividend yield is sitting at 5.17%. And when you compare that dividend yield to the rental yield you get from a single let property in the UK, the average rental yield is 3.53%. Also, bear in mind, guys, when you're investing in dividend paying companies, it's completely passive. You're not worried about maintenance cost. You're not worried about letting agency fees. So a 5.17 yield for doing nothing but being a shareholder, I don't think is a bad deal. Okay, guys, so before we jump into the financials, let's take a quick look at the fundamentals so you get a clearer picture of what the company is about. So Realty Income, they are a REIT, the Real Estate Investment Trust. They have 6,400 properties across America. A majority of the tenants are commercial tenants, and they have over 300 commercial tenants. Okay, so they boast a 98.5% tenant occupancy, which is insane. And not only that, all their tenants are well diversified, and they are operational in 51 different industries. So to take a good look at their industry, we go onto their website here, and you can have a look at their portfolio. And if you click on industry diversification, it shows you a list of all of their tenants. So it ranges from aerospace, apparel stores, beverages, consumer goods, electricals, convenience stores, drug stores, dollar stores, which are 99p stores in the UK, Poundland and stuff like that, electric utilities, entertainment, healthcare. So they're very, very well diversified. Okay, so how do they generate their income? So, well, it's pretty obvious. Monthly rent that they get from these commercial properties. That pretty much counts up to 80% of their revenue. 11% of their revenue is from warehouse space, so that's storage. 4% is from offices and 2% is from farmland. 15 of their top 20 tenants all remain open and are an essential goods and services business. This is crucial for a pandemic that we're in right now, the lockdown. The fact that 15 of their top 20 tenants are still open because they're a key essential goods and service business is incredible. The top 4 industries in Realty Income's portfolio did well amongst the global lockdowns. The top 4 are convenience stores, which is 11% of the rent, drugstores 9%, dollar stores 8%, and groceries 7.7%. And if you look at their competition, for the month of April, Realty Income beat out all of its competition in terms of rent collection. Alright guys, so now we have a better understanding of Realty Income, and we have a good understanding of their fundamentals and their story. The next step now is let's take a good look at their financials. Okay, so to do that, we're on Yahoo Finance. Click on financials, and as you can see here, the management have been doing a really good job in terms of growing the revenue. It's grown year on year, which has resulted in a net income that's also grown year on year. And as a result, they've got quite a healthy operating margin, which sits at 49.57%. So as I said in my last video, guys, a good way of looking at it is for every £100 that this company makes, £49 is kept as earnings. Their current PE ratio is sitting at 36.1. Now moving on to their balance sheet, you can see that their total current assets are higher than the company's total liabilities. Current ratio is sitting at 0.89, and I prefer for the current ratio to be over 1. The total cash position for the company has seen an improvement year on year, and also the stockholder equity has been growing year on year, which indicates that the assets have been growing faster than the liabilities. Taking a look at the company's cash flow statements, and Realty Income has not been losing money from its operations. As you can see, it's grown year on year, which is a great sign of prosperity. The company has been buying back shares, but a majority of the cash flow, as you can see here, guys, as well, is from the dividend payouts that they make. The company has grown its free cash position and it remains positive. Alright guys, so to wrap it up, I think Realty Income is a great company. They've got solid financials and their fundamentals as well puts them way ahead of the competition. They have a well-diversified commercial tenant portfolio, and majority of their top 20 tenants, they are key services. Okay guys, so once you're on the Trading 212 platform, you click search, you type in Realty Income, and there's our company here. And if you wanted to buy one share of Realty Income, it will cost you £42.21 to pick up one share. Okay guys, so the second stock that's a monthly dividend payer is LTC Properties, ticker symbol LTC, which means long-term care. So these guys pretty much, they are also a REIT, but they're a healthcare REIT, guys. They pretty much specialize in investing in senior housing and assisted living facilities. And they currently sit at over 200 properties in their books. Now, when I was researching this company, look, guys, I'm going to beat around the bush. It's quite boring, nothing exciting. But boring is stable, boring is consistent. And another main advantage, guys, is it's got growth potential because there's been an increase in the aging population. Okay, so how do these guys generate income? Okay, so they purchase the properties and lease it back to facility operators. And typically, guys, the leases last from between anywhere from 10 to 15 to 20-year intervals. So they pretty much have these clients secured for the long term, all right? And they provide skilled nursing facilities, which makes up 60% of its revenue, and the senior housing properties make up 40% of the business's revenue. Guys, I'm looking at the interesting fundamentals that I've noted here. So they're a triple net lease, which means the tenant is responsible for the maintenance of the property, all of the taxes, and the insurance of the properties. So they're pretty much in a great position where they don't have to be responsible for any of the maintenance, and that's less expenses for the company. Now, according to Omega Healthcare, the growth rate of Americans at the moment for age 75 plus is rapidly growing, guys, and this creates a huge opportunity because an increase in aging population means an increase in senior living demand. Okay, guys, so LTC have a dividend yield of 6.33%. Historical data, they've been paying their dividends since 1992, and they started paying it on a monthly basis from the year 2005, and the growth has been steady. As you can see here, the dividends that they're paying their shareholders per month has been steadily increasing, and currently now it's sitting at 19 cents a share. So looking at their financials, guys, the total revenue has grown year on year, which is a great sign. However, they have suffered a decline in their net income, particularly from 2018 to 2019. But the good news is they still remain at a solid operating margin, which is at 59.29%. See here, guys, their total current asset far outweighs their current liabilities, and which is going to give it a phenomenal current ratio, which currently sits at 4.39. That's probably one of the highest current ratio that I've seen. Alright guys, so jumping onto the Trading 212 app again, all you have to do is type in LTC Properties, and here is our stock. And if you wanted to pick up one share of LTC Properties to start getting paid every month, it will cost you £29.14. Okay guys, so the last stock is Main Street Capital Corporation. So this company actually has the best dividend yield out of all three companies, sitting at 7.99%. But it doesn't have the best dividend history and probably has the worst financials. So since we're on financials, let's take a look, guys. I should warn you, it's not that pretty. Their income has seen a decline, as well as their revenue. Their balance sheet, looking at their balance sheet as well, guys, to be fair, their assets, their total assets have been good, and they have been growing their stockholder equity, which is a sign that the assets is growing quicker than the liabilities. And also, guys, if you take a look at their dividend historical data, they've only recently started paying shareholders in 2008, and it started quite well, but they've dropped their dividends straight afterwards. The company pay a special cash dividends, and that's pretty much based on the company's profitability. However, in a recent press release, the company have announced that they will be reducing their special dividends as a result to help them preserve cash. All right. And lastly, guys, we're going to take a look at the company's fundamental. Again, what's the story? The company, they're a business development company. So essentially, they help businesses by funding their acquisitions, pretty much supplying them with cash and helps them with growth projects. So in the UK, you could regard them as like a bridging company of a sort for companies rather than property. So the revenue is generated from the equity and the debt investments that they receive from the companies that they've invested in. And if you have a look here, their industry is quite well diversified, involved in quite a number of industries. Granted, a few of the industries have been affected by the lockdown, but they do have industries that are regarded as key services. Okay, guys, so once again, on the Trading 212 app, if you just type in Main Street Capital, comes up here. Again, we wanted to buy one share of Main Street Capital. That will cost you about £24.73 at the current market price.
Alright guys, I hope you enjoyed that video. Remember, investing, there is always risk involved, okay? So please share this with your friends, share this with your family. Hit the like button, subscribe, and I'll see you on the next one, guys.